Over the last couple of months, the alarm bells of recession have been sounding. Over 12,000 jobs have been lost in the edtech sector alone. Why these people can maintain stability while the financial world around them is crumbling. And so, I decided to get the answer from the best. Over the last couple of months, the alarm bells of recession have been sounding, further exasperated by the layoff scene in tech giants. In India, this has taken another dimension, with not only the major IT companies laying off employees, but even the startup ecosystem crumbling under the pressure. Over 12,000 jobs have been lost in the edtech sector alone, with one of India's brightest startups, Byju's, suffering the most. Obviously, the people are concerned, especially the middle class. After all, the ultimate achievement for most middle class people is to get a job at an MNC. But the rich are not concerned, neither with the layoffs, nor particularly with the recession. This got me thinking as to why these people can maintain stability while the financial world around them is crumbling. And so, I decided to get the answer from the best. In this video, I will share with you the ultimate advice Robert Kiyosaki has to get rich, and it starts with understanding money. The rich are getting richer. What this chart shows is that the rich know something about money that the middle class and the poor don't. During booms and busts, the poor are continuing to get poorer. It doesn't matter which economy it is. The middle class are treading water. The rich are getting richer. But how? To understand this, we have to look at the history of money. There are 4 economic ages of humanity. First, the hunter-gatherer age. In the hunter-gatherer age, humans relied on nature to provide wealth. They were nomadic and went where the hunting was good and the vegetation plentiful. You had to know how to hunt and to gather, or you died. For the hunter-gatherer, the tribe was social security. Socio-economically, everyone was even. They were all poor. The agrarian age. The agrarian age saw the rise of classes between people. Due to the development of technology to plant and cultivate the land, those who owned the land became royalty, and those who worked became peasants. The royal rode horses while the peasants walked. Socio-economically, there were 2 groups, the rich and the poor. The industrial age. While many people would place the beginning of the industrial age in the 1800s with the rise of the factories, I actually think it at the beginning of 1492 with Columbus. When Columbus struck out to find the new world, it was to find new sources of valuable resources such as oil, copper, tin, and rubber. During this time, the value of real estate shifted from growing crops to providing resources. This led to the land becoming even more valuable, and 3 classes emerged: the rich, the middle class, and the poor. And lastly, the information age. Today we are in the information age, where information leveraged by technology and inexpensive resources like silicon produce wealth. This means that the price of getting wealthy has gone down. For the first time in history, wealth is available to just about everyone. Now there are 4 groups: the poor, the middle class, the rich, and the super rich. The top 1% in India went from owning 22% of the nation's wealth in the early 90s to over 33% in 2021. The reality is that money is no longer money. It is a full currency, and the true value in a currency world is being able to control and manipulate information. This is what the rich and the super rich have become experts at. Losing money in the blink of an eye. Now, one of the problems with the information age is that you can lose a lot of money very quickly if you blink. The pace at which information flows and changes, and the massive amounts of information that come our way, can make it very hard to respond correctly and in time. This reality makes it hard to think proactively, because if you're not careful and you don't have enough financial education, you'll react to every piece of information that comes your way. The answer to being rich is not to have more money. Surprise, surprise. Have you ever heard anyone say that they wish they had $1 million? Then they'd be rich, right? How about someone wishing they'd win the lottery? Then they'd be set for life. Of course, the world is full of people who have made $1 million or won the lottery and lost it all. They are not rich any longer. Now, why is that? Fundamentally, it is because they misunderstood what makes you rich in the first place and what money really is. Which brings me to my next point, the mindset of the poor. Today, traditional assets do not make you rich or financially secure. Just ask all those investors who lost everything during the last Great Recession of 28. In the US, when their homes and their 401ks were decimated. Today, you can lose money on businesses, real estate, stocks, bonds, and commodities. Any and every asset class can fail at any given moment. Just look at what happened in the age of COVID. This wasn't always the case. In our parents' generation, for instance, you could count on the old rules of money to work. For most part, you could put money in the bank, expect a decent return, and every once in a while buy some gold or similar commodities. Houses rose modestly each year in value, and employers took care of you in retirement, including the government. Money, for all intents and purposes, was money, and you could count on it. That is no longer the case. If you trust in those things, you are in a world of financial hurt. Trusting in the old rules of money is exactly what the mindset of the poor is. Which brings to the obvious next question, the mindset of the rich. Now, the rich have a different mindset when it comes to money. They understand that there are new rules of the game and that the old rules are no longer going to work. So, where the poor think that in order to be rich, the rich know that savers are losers and that the magnitude of your wealth is relative to something called the velocity of your money or how quickly you can accumulate it. Where the poor think their house is an asset, the rich know that your house where you live is not an asset. Now, where the poor think that you need a good education in order to be rich, the rich clearly understand that financial education is actually much more important. The poor believe in fake assets that take money away from them every single month. The rich understand that money is best used to get real assets that put money in your account, not take it away from you. Now, there are two types of financial education information. In the information age, traders are in the worst possible position. It's nearly impossible for a trader to keep up with the flow of information. And since they make their money through transactions, buying and selling, they are susceptible to market swings they have no control over. They are addicted to immediate information. No matter how many YouTube videos are circulated with the so-called traders claiming to have made millions, the fact is, trading can make you poor just as fast as it can make you rich, which by the way is the case for 95% of the people, perhaps even faster. This is a crucial piece of information I learned from Robert. He goes on to explain his outlook in detail. He says, and I quote, "I don't like to trade. Instead, I prefer to invest for the long term in assets that cash flow and that adjust with inflation. As such, I pay attention to the operating history of a particular asset. I am purchasing and the trends over many years in the industry of that asset. I pay secondary attention to what is happening right now. I am addicted to historical information, not immediate information." If you want to get rich quick, you can take your chances with immediate information. Of course, you can also get poor fast. If you want to build a lifetime's worth of wealth, I'd stick with historical information. For instance, historical information tells me that every currency in the history of mankind goes to zero. As such, I am investing in gold, silver, and oil, as well as real estate. These assets go up in value as the value of currency goes down. They are long-term investments, and assets like oil wells and real estate also provide cash flow. putting money in my pocket every single month instead of fake assets that take it away from me. Sure, I still pay attention to some of the immediate information. For instance, I watch the price of gold closely, but not because I want to sell my gold and make a quick cash profit. Instead, I want to know when gold goes down, low enough for me to buy some more of it. I trust gold more than the dollar in the long run. Unquote. This is a perspective from a man who has been involved with top tier bankers and other major stakeholders in the finance space. As you can see from the graph, over the last nearly 120 years, the price of gold has held its value relative to the world's money. That's because gold is real money. It's God's money. That is the historical information you can always rely on. Another piece of information is historical and easy to understand is that the more money, that is currency, the government produces and puts into the system, the lower its value becomes. It's economics 101. This is why you cannot trust the government's money. You have to trust timeless money like gold, silver, real estate, and oil. The good news is that, like the rich, you can learn to print your own money by understanding the history of money and how to use that information to your advantage. This is exactly what the basis of my channel is. Now, for the trader, immediate information rules. It's about buying and selling at the bottom and at the top. The problem is, you never know what exactly when that is. So you have to make your best guess. Sometimes you make a great guess and you make a shit ton of money. Other times you make a tragic one. It all depends on the quality of information. You can make a lot of money, but at the same time you can pretty much lose your entire portfolio. Now this is a crucial point because this leads us to a more important discussion, which is the difference between information and knowledge. In classrooms all across the world, the internet is readily available and technology is second nature to most kids. Regardless of socioeconomic class, information is largely free and abundant and cheap. For the first time in history, people can access information and learn about literally anything, no matter whether they are poor or rich. While all this information is very valuable, it's not as valuable as knowledge. Knowledge gives you the ability to filter out unimportant information and to find the important information. Knowledge gives you the power to act on information. Knowledge is what makes you rich, not information. The knowledge mind shift. Oil is valuable. Many people would love to own lots of oil, but owning lots of oil will not make you rich. It's making the mind shift to understanding how oil can make you rich is what brings the wealth in. For instance, crude oil is of little to no value until it is refined. That is a complicated process that requires science and equipment. It takes knowledge to refine oil and make fuel. Fuel is valuable and will make you rich, but you can't have fuel without oil. Today, it's no different in the information age. You could have all the information in the world, but without a mind shift to knowledge, you could still be poor. The reason Mark Zuckerberg, for instance, is such a success is because he has the knowledge of what to do with information and knowledge of how to build technologies to leverage information. Mark Zuckerberg's knowledge of internet technology enabled him to build Facebook. He also knows how to build a team and find people smarter than him to make Facebook bigger and better. Finally, he has knowledge that information is valuable for selling. Facebook excels at collecting your information, processing it, and selling it to advertisers who target their ads to make money off of you. So now the question is, will you make the money mind shift? It is not the information that makes Mark Zuckerberg rich. It is his ability to process and leverage it. Again, that is knowledge, and knowledge comes from education. We live in an age where wealth is abundant and accessible to literally everyone, including you. But you have to be financially educated to be able to process and leverage it. Today, knowledge makes you rich. and lack of knowledge makes you poor. It has absolutely nothing to do with your degree, your college, or where you went to school. In this brave new world, it's your knowledge that is the new money. I encourage you to increase your financial IQ by increasing your financial education. Then you will be able to find the important information and have the knowledge to act on it. Unfortunately, it is something that school does not teach you. Investing in cash flow. Finally, my advice is same as it's always been on this channel. Invest in assets that cash flow and hedge against inflation. In order to do that, you need deep and comprehensive historical information about money and asset classes. This is why I always encourage people to invest first in their financial education. Immediate information will come and go in the blink of an eye, but a comprehensive financial education will last you a lifetime and help you build wealth for generations. Understanding money is the first step to making money. Knowledge is power, and financial education is not something the school teaches. You must invest time and energy to learn about money. Once you do that, the rest of the journey becomes easier. If you enjoyed the video and found it informative, make sure to like it. Also, subscribe to the channel for more such content on finance and mindset. Take care of yourselves and your families. God bless us all. Thank you.